Welcome to Breaking News to Trading Moves. Today we're looking at Netflix and their recent strategy announcement. They've said they're going all in on AI, across the whole platform, really. Content, ads, everything. So for you listening, we want to quickly pinpoint, which companies might gain from this and which ones might face some new challenges.
That's right. And the context is important. Netflix isn't just tweaking things slightly. They're talking about using generative AI as a really core tool everywhere. Think optimizing ads, making recommendations better, and crucially, getting content out much, much faster, especially with localization.
Right, getting it ready for dozens of languages.
Exactly.
And they are positioning it, as you said, as a tool for creators, an accelerator, not something to replace people.
Correct. The focus seems to be on things like AI-powered search using natural language and speeding up those tricky workflows, visual effects, dubbing, subtitling, making those processes faster.
Okay, so if they're pushing this hard on AI, where does the first wave of demand hit? It's got to be the underlying tech, right? The compute power.
Absolutely. That's the engine room, as you put it. When a platform the size of Netflix decides to scale up AI like this, well, the need for processing power, both for training these models and running them, it just increases a lot.
So more AI features mean more demand for chips and cloud.
Precisely. If they're using AI for every recommendation, every targeted ad, that translates directly into needing more capacity for training the AI and what's called inference, which is actually using the AI in real time.
And that sends a signal, doesn't it, if Netflix is doing this?
It really does. It kind of validates the approach at scale, and it puts pressure, real pressure on competitors to invest more themselves just to keep up. It becomes almost a necessity.
Okay, so let's name names. The obvious beneficiaries here are the companies making the specialized chips, the GPUs. We're talking NVIDIA, ticker NVDA, and also Advanced Micro Devices, AMD.
Yep, those are the key players for the silicon.
And then the cloud platforms where this heavy lifting happens, the hyperscalers.
Right, Amazon with AWS, so ticker AMZN, and Microsoft for their Azure platform, ticker MSFT.
These are the companies providing that massive infrastructure needed.
Exactly. And we're already seeing reports that suggest this isn't just theoretical. The need for more cloud capacity and compute power tied to these Netflix AI features seems to be happening now. It's near-term demand.
Okay, so they've got the raw power sorted. What next? They need tools, right? Tools to make money from it, and tools to actually make the content itself using AI.
Okay.
Let's talk monetization first. Advertising technology or ad tech?
Okay. So if Netflix uses machine learning effectively to improve how they target ads and maybe even the ad formats themselves on connected TV, well, that really shows the whole CTV advertising world that data-driven approaches work very well.
So other platforms benefit.
Yeah, independent ad tech companies, especially those focused on CTV measurement and trading, they could see more ad budgets flowing their way because Netflix is essentially proving the case for these sophisticated data-backed campaigns on streaming platforms.
All right, so which companies are positioned well in that ad tech space? You'd think of Alphabet, that's GOOGL, because of YouTube and their huge ad network.
Definitely.
And platforms that help advertisers buy those CTV ads, like The Trade Desk, TTD.
A major player in programmatic advertising.
Plus, the companies that, verify the ads are seen by real people and in the right context, like Double Verify, DV, and Integral Ad Science, IAS.
Absolutely. Measurement and verification become even more critical as the targeting gets smarter. You need that accountability.
Okay, that covers the ad side. Now, what about the content creation part? You mentioned speed, localization. That points to another set of tools. Category 3, AI-powered creation and content tooling.
Yes, exactly. This links back to what Netflix explicitly mentioned, AI helping with dubbing, subtitles, speeding up things like visual effects. The goal is faster turnaround, getting content ready for global audiences much quicker. So that naturally drives demand for specialized tools. We're talking generative AI for visuals, speech recognition, translation, vision tools, anything that cuts down post-production time.
Right, making that whole pipeline more efficient.
Yeah.
So which companies provide these kinds of tools? Adobe comes to mind immediately, ticker ADBE, with their Creative Suite.
Absolutely. They're central to creative workflows.
Then maybe companies focused on voice and audio AI, like SoundHound AI, that's SOUN, and maybe Veritone, VERI.
Yes, those specializing in speech-to-text, translation, voice synthesis, that sort of thing, they fit right in here.
And for the visual side, particularly post-production and effects, Autodesk, ADSK.
Yeah, Autodesk software is widely used in VFX and post-production, so tools that integrate AI to speed that up would be in demand.
Okay, so we've mapped out Who potentially gains from Netflix spending more on AI? The infrastructure guys, the ad tech players, and the content tool makers. But like you said earlier, when one big player makes a move like this, it creates pressure elsewhere. So we need to look at the other side. Which companies might find this Netflix AI push challenging? Let's talk about potential losers.
Okay, the first category is probably the most direct. Other streaming services, particularly legacy media companies that might be a bit slower in adopting AI at this scale.
Right. The direct competitors.
Exactly. The potential issue here is if Netflix uses AI to get, a clear advantage, maybe their recommendations get so good that people watch more, or their ad system becomes much more efficient at making money. If that happens, rivals who haven't kept pace with AI might struggle. They could see more customers leaving, what's called churn, or find it harder to make as much money per user, the ARPU, average revenue per user.
So who specifically might feel this pressure? We're looking at companies like Warner Bros., Discovery, ticker WBD.
Yes, they're a major competitor in the streaming space.
Paramount Global, PIRA.
Them too, also trying to scale their streaming business.
And maybe Fox, FOXA.
Could be. Any large media company trying to compete head-to-head with Netflix on streaming now faces this potentially higher bar set by AI investment.
Yeah.
They might need to spend more just to stay competitive.
Okay, that makes sense. But let's go back to the ad side for a second. You mentioned Netflix might build out its own AI-driven ad system. If they do that really well, doesn't that pose a risk to some of the existing ad tech middlemen?
It certainly could. That brings us to our second category of potential losers.
Yeah.
Some CTV intermediaries.
How so? Explain that risk.
Well, look, if Netflix develops a really powerful proprietary ad platform using its own first-party data and sophisticated AI, advertisers might just find it more effective or maybe easier to place their ads directly with Netflix. They might bypass some of the existing third-party platforms, the gateways or the SSPs, sell-side platforms that currently connect advertisers to CTV inventory.
So Netflix could potentially capture more of the ad spend directly, cutting out some intermediaries?
That's the risk. If Netflix's system offers demonstrably better targeting or measurement because of its AI and direct access to viewer data, why would an advertiser go through an extra layer?
Okay, so which companies are potentially vulnerable here? Those acting as sort of gatekeepers or exchanges in the CTV ad market?
Right.
Roku, ticker ROKU, comes to mind. They have the hardware platform, but also a big ad business.
Yes, Roku is definitely a key player in that intermediary space.
And maybe Magnite, MG&I. They're a large SSP focused on CTV.
Magnite, too. Companies heavily reliant on facilitating those third-party ad transactions on CTV could face pressure if large players like Netflix build more powerful direct channels.
Even if they control the hardware, like Roku does.
It still presents a challenge. The ad dollars follow the efficiency and the audience access. If Netflix can offer both directly powered by AI, that's compelling for advertisers.
Got it. Okay, one more category of potential losers. This one feels maybe broader, tied to overall viewing habits.
Right. Category 3, the linear-first broadcasters, companies still primarily focused on traditional television.
And the logic here is?
It's pretty straightforward, really. If streaming platforms like Netflix keep getting better thanks to AI making content creation faster, cheaper, and the recommendations smarter, well, that just makes the whole streaming experience more attractive compared to traditional TV.
So it pulls even more eyeballs and ad money away from linear channels.
Exactly. It potentially accelerates that existing trend. Better content, better personalization on streaming platforms means less time spent and fewer ad dollars allocated to traditional broadcast TV.
So this impacts the companies heavily invested in local broadcast stations and traditional models.
That's the idea. Companies like Tegna, TGNA, Sinclair, SBGI, and Gray Television, GTN, they're already navigating the shift towards streaming, and a tech acceleration like Netflix's AI push might just make that transition even more urgent or difficult for the linear side of the business.
Okay, that gives us a pretty clear map then. Infrastructure, ad tech, content tools as potential winners, and legacy streamers, some CTV intermediaries, and linear broadcasters facing potential headwinds from this Netflix AI strategy. But analysis is one thing. For you listening, how can we track if this is actually playing out? What should we watch for?
Good question. We need some concrete signals. I think there are 3 key areas to monitor. First, keep an eye on Netflix's own metrics, specifically those related to these new AI features.
Like what? User numbers.
User engagement is key. Is that AI-powered natural language search actually keeping people on the platform longer? Are they watching more? And crucially, for the ad-supported tier, how are the ad KPIs? Key performance indicators. Are the new ad formats they test, potentially powered by AI, actually performing better for advertisers? Look for comments on conversion rates, ad revenue growth per user.
Okay, so watch Netflix's own performance tied to AI features. What's the second point?
Second, go back to that infrastructure layer. The proof is in the pudding, or rather, the purchase orders. Listen closely during earnings calls and read reports about GPU orders. Are NVIDIA, NVDA, and AMD talking about increased demand potentially linked to clients like Netflix scaling AI?
And the cloud providers.
Same thing. Watch the capital expenditure, or CapEx, figures from Amazon, AMZN, and Microsoft, MST. Are they boosting their cloud infrastructure spending? Commentary linking that spend to AI demand would be a strong signal.
Right. Follow the money flowing into the hardware and cloud. Makes sense. And the third point.
Third, track the content creation side. Listen to what the tool providers are saying. Companies like Adobe, ADBE, Autodesk, ADSK, Veritone, VRI, SoundHound, SAUN. Are they mentioning AI-assisted localization or faster VFX pipelines in their earnings calls? Are they reporting actual gains in throughput or efficiency for their media clients? If they start highlighting how their AI tools are speeding up content production for major streaming clients, that validates the thesis on the content tooling side.
Got it. So Netflix's own metrics, infrastructure spending, and commentary from the tool vendors, those are the key things to watch. That really frames this Netflix AI news not just as a headline, but as something with defined potential impacts across specific sectors, giving you clear signals to monitor. And just a reminder to everyone listening, this discussion is based on analysis of publicly available information and opinions. It is not financial advice, and it doesn't constitute a recommendation to buy or sell any securities. It's purely for informational purposes.